Tech trends and predictions for 2025, the collaboration between ServiceNow and AWS, and the top 5 hidden ERP software costs that you need to know. Those are just a few of the topics that we'll cover here in episode 202 of Transformation Ground Control.
Welcome to Transformation Ground Control. Ground Control. The podcast that covers everything related to digital transformation. This podcast features technology agnostic and international discussions related to digital strategy, software selection, implementation, change management, business process optimization, and everything else you need to know to make your digital transformation project successful. Whether you're embarking on an ERP implementation, supply chain transformation, or any other business or digital transformation, this podcast is for you. Now, here's your host, Eric Kimberling.
5, 4, 3, 2, 1.
Ground control to Major.
Hello, welcome to Transformation Ground Control, episode number 202. My name is Eric Kimberling, the CEO of Third Stage Consulting. We're an independent consulting firm that helps clients throughout the world with their digital transformation journeys. And this is the podcast. It's tech agnostic, independent, objective, and has everything to do with digital transformation, including the people, process, technology, and strategy sides of change. Joining me, as always, is our co-host, Darian Chwialkowski. Darian, thanks for being here.
Yeah, thank you for having me.
I'm already having trouble talking. We're 30 seconds into the episode, and I cannot talk, so hopefully it gets better. It can only get better from here, I would hope. So thanks for being here today, Darian. Thanks to the audience for being here. You can find new episodes of the show every Wednesday by going to transformationgroundcontrol.com. You can also see past episodes at that same website. You can learn more about us at thirdstage-consulting.com, who's the sponsor of this podcast, and the show is produced by Major Tom Productions. So we've got a great show for you here today. We are excited. We're going to talk about some newsworthy topics, including the ServiceNow and AWS strategic collaboration. We're going to talk about how the U.S. has expanded restrictions on China's access to advanced semiconductor technologies. And then we'll also cover some audience Q&A as well, some social media questions we've received here recently. And then later in the show, we're going to talk about tech trends and predictions for 2025 with Sam Gupta from ElevatIQ. He's a fellow ERP consultant and principal consultant at that company, ElevatIQ. So he and I are going to exchange notes and talk about some of the tech trends and predictions that you should be aware of. We did talk about some predictions a few episodes ago, back in episode 198. We also covered this topic of top trends and predictions. Those are just my views of the predictions back in episode 198. But today we'll have a guest joining so we can dive further deeper and go in some different directions there with that conversation. And then after Sam is on the show, we'll also talk about the top 5 hidden ERP software costs that you should be aware of. So before we jump into bring our guest on the show, Darian, what sort of audience questions have you received here recently?
Yeah, we have a few audience questions. We'll start today with this one. It's, what is the top ERP in the USA for energy companies and manufacturing?
Energy companies and manufacturing. Well, it's probably going to be a different answer depending on whether you're manufacturing or energy. For energy, honestly, we see a lot of SAP S/4HANA, and we see a lot of Oracle Fusion as sort of back office ERP systems. But energy companies, especially if utility companies, they tend to need other technologies that are industry specific and bolt onto those core ERP applications. So in energy, we're more common to see more best of breed solutions in those cases where you've got a back office ERP and then you've got other bolt on solutions that address some of the nuances of energy companies. In particular, in the U.S. or in the energy and utility companies, or in the utilities and like electric and gas utilities industries, there's a lot of need for outage management and mobile workforce management, things like that. So a lot of times companies will have that best of breed model. However, there are some software vendors, ERP software vendors, that focus on energy. One in particular is IFS. They deal a lot with asset intensive companies that have a need for field services as well, and that tends to fit a lot of energy companies. So those are just a couple examples of what we see in the energy space. Manufacturing is wide open. I mean, there's just a lot. I couldn't tell you who the most common is. I mean, for big manufacturers, I'd say it's probably SAP S/4HANA and maybe to a lesser degree Oracle Fusion. But there's a lot of tier 2, tier 3, smaller niche solutions as well, like Acumatica and DCOM and Epicor, Infor. A lot of those types of vendors focus on manufacturing. And I wouldn't say any of those are the top one. In terms of market share, it's probably SAP, but that doesn't mean it's the top one, in my opinion. That just means more bigger companies use them, and they just happen to sell more software. But there's a lot of really good, viable, mid-tier, kind of middle ground solutions for manufacturers as well.
Yeah, absolutely. Maybe we'll have to come out with some lists for different specific industries, and like what we do with our top ERP list in 2025, we will have to do a top list for specific industries. I can't talk either today.
Well, or maybe it's a Freudian slip. ERP projects can be injuries for organizations. We don't want them to be, but they can be. And we used to do that. We had done it a few years ago. We did some industry specific top 10 lists for different industries. But it's a good point. You have a good idea there that we should probably refresh those lists and give it a 2025 update.
Yeah, absolutely. So maybe be on the lookout for those in the future. But our next question today is, any thoughts on applying a product operating model to an ERP implementation and post go live?
Product operating model. Not exactly sure what that would mean. I suppose I'm speculating that the person is referring to not the development, but the just sort of the vision or the design of how technology is going to be deployed, which is similar to, I guess, a product operating model where you have an operating model supporting the development of a product. I'm just trying to decipher what it might mean. But if that's true, and hopefully that is, if that is the intent of the question, I would say yes. Anything you could do to add structure and governance and a repeatable process to your implementation and even your post implementation is really important. Is going to benefit you. I like that the person is asking about post implementation too, because it brings up a really good point that you need to define sort of what your governance and your operating model is going to look like with your new system, not just to get you to go live, but also longer term, how you maintain that system and how you allow yourself to grow into the system, allow the technology to keep up with your business and all that good stuff. So I think having a sort of governance or structure or operating model, whatever you want to call it, around that is going to be super important and it's super beneficial.
Yeah, absolutely. Some great questions today, but I want to get into our newsworthy articles of the day. The first one is about ServiceNow and AWS and their strategic collaboration. This collaboration is to accelerate AI-driven business transformation with new capabilities. The key highlight is a connector enabling seamless integration of multi-model AI models from Amazon Bedrock to its ServiceNow Gen AI powered workflows on the Now platform, allowing customers to leverage AI for tasks like summarization, analytics, and code generation while ensuring data privacy. Additional automation solutions such as integrations with AWS Security Hub and Amazon Business Procurement are now available in the AWS Marketplace, enhancing security, incident response, and procurement workflows. This partnership supports industries like telecom, finance, and retail, delivering optimized technology investments, enhanced digital experience, and faster AI deployment. Notable customers like Bell Canada, Boomai, and Parson have reported significant savings and operational efficiencies through this collaboration. With this, Eric, how significant is this expanded collaboration between ServiceNow and AWS in the broader context of AI-driven digital transformation for enterprises?
I think it makes a lot of sense because AWS is such a big behemoth in the cloud and now the AI space, with their data centers and just their mass scale of their cloud computing capabilities. So I think what AWS has in terms of that infrastructure dwarfs what any one tech company could do. Especially ServiceNow is not a small company, but they're not a huge one either. They're not as big as AWS. And so you've got AWS that has more capability and more scale and that sort of thing. And rather than trying to recreate that yourself, if you're ServiceNow, it makes a lot of sense to partner with AWS. And you're seeing a lot of these big tech companies more and more. It feels like they're collaborating. They're not just acquiring each other, which is what you'd see in the past. They'd go acquire another company or merge or whatever. But now it feels like collaborations are becoming really common. In fact, on this show in the past, we've talked about Salesforce and Workday and how they're collaborating now. And they technically were sort of competitors in the past, but now they're joining forces to create sort of a joint offering, if you will, that complements each other. So I think, it's probably a faster path to scale if you're a ServiceNow. It's a faster path to technical innovation, and it just eliminates the need for redundant effort. The question is going to become, over time, these companies, already big companies all start collaborating. They start joining forces. At what point does it almost become too much, like too big for it to be effective for agility and for these companies to be able to respond to their customer needs? I don't know the answer to that, or I don't know if that'll be an issue, but I do wonder if the continued consolidation of software companies, the big tech companies, as well as the collaboration between these big tech companies, at what point does it sort of tilt the playing field too much, to their advantage and not so much to their customer advantage? Or does it sort of limit their ability to innovate over time just because they're so big? I don't know the answer to that, but it's something that sticks in the back of my mind.
Yeah, absolutely. And what industries do you think will benefit the most from these new capabilities, and why?
Well, I think a lot of customer service driven organizations, like, think about like an energy utility company, because we were just talking about that. Like a utility company, if you want to log in and you have a question on an invoice, or you have an issue with your service that you're being provided, ServiceNow allows that sort of tracking of tickets, if you will, like customer support tickets and things like that. So anything that has a heavy customer service and a consumer facing side of things, I think is going to be probably the most beneficial. So I think consumers, end consumers, not so much in the B2B space maybe, but more B2C with end consumers, I think that's where you're going to see a lot more benefit from these sorts of collaborations.
Yeah, that makes sense. And I know you talked about a lot of large companies are collabing, but how do you think that this partnership with ServiceNow and AWS puts their position against competitors like Microsoft, Google Cloud, Oracle, in like the AI and automation space specifically?
Well, I think it just gives them a leg up, because now they don't necessarily, like I said, they don't need to develop their own capability to compete with Google or Oracle or Microsoft. They can piggyback on what AWS has already done. And ServiceNow has a pretty unique solution offering to begin with. And so now if you can add, basically steroids to it, or fuel to the fire, whatever cliche you want to use there, then that's just going to accelerate their ability, ServiceNow's ability to compete with Microsoft, Google, and all those guys. It is really interesting to see, though, because none of those guys are suffering. The ones you mentioned, I don't think Microsoft is going to suffer as a result of this, or Google or anything, but I think it just helps ServiceNow be more competitive and be more innovative in a lot of ways.
Yeah, absolutely. Is there I know we talked that in the future you see more collaborations potentially happening. Is there any other future, what you foresee in collaborations for the future happening, or good partnerships that you could envision?
I think probably if I had to guess, I'd say you might start to see a lot of the tier 2, like the mid-tier providers, software providers, do something similar. So for example, you look at a company like, let's just talk about Epicor. We've had a few guests on the show from Epicor in the past, and Epicor does a lot in the sort of mid-market, for the most part, mid-market manufacturing and distribution, and some retail companies. However, Epicor, they're strong in those areas, but they're not as strong in something like financials and reporting and things like that. They're fine. It works for a lot of companies. I'm not saying it's bad. It's just there are other systems out there that might do financials better. So I could see some of these some of these providers like an Epicor, maybe they start to join forces with someone like a NetSuite, or I forgot the name of it's not Financial Force anymore. It's called something different now, but it used to be called Financial Force. Systems that specialize or are very strong in analytics and reporting. What if they were to create some sort of collaboration to go to market to say, okay, not only can we provide you these manufacturing capabilities, but we can also speak to the accounting and the finance needs of the organization a little bit better than maybe we did in the past. And so I could see something like that being an opportunity for the mid-tier software providers too, to figure out, how could they join forces maybe with some of their peers in the mid-market to provide something similar that ServiceNow is doing.
Yeah, absolutely. And maybe gain a competitive edge, obviously, over their other same tier level competitors.
Yeah, absolutely.
Awesome. Well, we're going to move on to the next newsworthy article of the day. This one is about how the U.S. has expanded its restrictions on China's access to advanced semiconductor technology, including chip making tools and AI memory components, to curb China's military and AI advancements is the goal of this. Key measures include tighter export controls, additions to entity lists, and limits on high bandwidth memory chips. These actions aim to safeguard U.S. technological dominance, but have raised global supply chain concerns. With this, Eric, how do the new U.S. export restrictions on China's semiconductor sector an effect on global ERP system implementations, particularly concerning the hardware availability and supply chain stability?
Great question. It's really interesting because I think anytime you have disruption in the economy or within geopolitics or supply chains or whatever, that creates more pressure on technology and more pressure on businesses to leverage technology to respond or to change their technology. And anytime you have that, that usually leads to an increase in ERP implementations or technology upgrades, technology implementations, whatever. And in fact, this is something that I know we're going to discuss with our guest here in just a minute when we talk about trends and predictions for 2025. He and I have sort of prepped the discussion in terms of what we want to cover and some of those predictions. And one of the things, just as a sneak peek to what we'll talk about here in just a few minutes, we are going to talk about sort of the geopolitical dynamics and how that is likely to affect technology, the technology sector in general, but more importantly, the technology implementations. And it's particularly in the U.S. with the new administration coming in and some changing views in the U.S. that, I know this is a global audience and a lot of you are not in the U.S., but you're thinking more about your home countries or regions. But I think that does have an influence on the global economy in terms of supply chains and what happens in other countries. So that is something we'll get into here after the break when we bring on our guest. But I think in general, that is, anytime you have those kind of changes, it is going to create disruption. It's going to create the need for new technologies, new processes, new business models, all that stuff.
Yeah, absolutely. And I feel like that's short term. But so I want to kind of shift to long term. And what is, in your view, what are the long term effects of these trade restrictions on global technology landscape and the enterprise software deployments?
Well, I guess my knee-jerk reaction is that I think by protecting, because I think this is all an effort to protect intellectual property and to prevent theft of intellectual property, which is, one of the big disputes that the U.S. and China have is that, the IP that the U.S. creates, they're worried gets, stolen by, Chinese companies, and then they find a way to do it for cheaper or better, knocking off or stealing some of that IP. How much of that is true is well outside the scope of this podcast, but we're not going to get into politics or, different government philosophies or whatever, but that is the general consensus between, at least in the US. So I think, if any of that is true, what'll happen is if companies feel like their IP is being protected or not being, blatantly stolen by, companies in another country, then there's likely going to be more money and innovation going into product development and innovation and new things because there's a higher likelihood of getting a return on that investment without having to worry about someone stealing the IP behind it. So I think it probably helps, honestly, longer term. It may, however, in the short term, it may create price, higher prices or higher costs because now, the advantage, I guess you could say, of someone stealing your IP or taking your IP and finding a way to do it cheaper or whatever is that it puts, brings prices down. So that's, I guess, the short-term potential bad news. But I think long-term, it probably creates more innovation and more capabilities. And that probably is a net positive, I would think. Yeah,
absolutely. And one thing I think is interesting is how do multinational corporations go about navigating the complexities of adhering to varying international trade regulations while pursuing if they want to do a full digital transformation?
Yeah, that's a great question. I mean, I think this is where the advantage of having a larger enterprise technology provider that's investing heavily in ensuring that their software can meet the needs of these evolving trade regulations and whatever. So I think that's one of the advantages is you hope or you suspect or assume that these tech providers are going to build the capabilities to reflect those, whatever the trade needs are. But at the end of the day, it's really up to the organizations themselves to define that future state process and make sure that they're adhering to the processes. They can't just rely on the software vendor to magically give them all of the regulatory compliance needs they have. They can provide some of the tools potentially, but the company itself that's responsible for adhering to these trade regulations. It's up to them to define what that future state is and what the business processes need to look like, and then use that as the blueprint for how they deploy new technologies.
Yeah, absolutely. And with that as well, do you think there is anything that companies need to be doing right now to future-proof their digital strategies?
Yeah, good question. So as far as future proofing, I'd say, the best way to future proof is to really just have a clear vision of what you want and prioritize and make sure you're sort of cherry picking and incrementally investing in technologies that meet two criteria. One is, high business value, high potential business value, and ideally relatively low potential cost and risk. And obviously that's the holy grail of what we all want, but at the end of the day, that's what you want to cherry pick, are the things that, address the greatest pains within the organizations or the greatest opportunities, but at the same time pose the least amount of risk to the organization. So you can almost view it as like a quadrant. You want to rank all the things that come as close as possible to meeting both those criteria. And I think that's really the best way, is to have that clear vision and roadmap, and also take, another way to future proof is to really have in the back of your mind, or have as a future state vision, what some of these technologies are and how they might fit into your longer term roadmap. And that's certainly what we'll talk about with Sam Gupta here in just a minute, in our interview discussion around the trends and predictions for 2025.
Yeah, absolutely. I'm excited to get into that conversation and see what you guys talk about for trends and predictions for 2025.
Yeah, this will be a really fun conversation, because we did cover this. If you didn't hear it, you can go back to episode 198. We covered the same topic back in 198, but it was me talking about what I thought, my trends and predictions, or our team's trends and predictions are for 2025. But this will be different, because this is more of a discussion, and we're actually going to focus more on what he thinks are some of the trends and predictions. You'll hear some overlap, but you're also going to hear some different perspectives, which Sam has a bit more of I'd say more of a technical background than me. So he has an interesting complementary way of viewing the enterprise tech space. And that's why I like talking to him, because I always learn a lot, because he has a different mindset and skill set than I do. So it'll be great to have him on the show. We're going to talk about trends and predictions here for 2025. And then later in the show, we're going to talk about the top 5 hidden ERP software costs that you need to be aware of. So if you're going through an ERP implementation, these are the costs you need to be aware of, because this is where these projects oftentimes become money pits. And we want to talk about that later in the show. So stick around. We'll be right back with more Transformation Ground Control.
I'm excited to announce the release of our 2025 Digital Transformation Report. It's available now on the Third Stage Consulting website, www.thirdstage-consulting.com. This report gives you an unbiased, technology-agnostic insight to help you optimize your organization's projects for success. Get your copy today using the QR code in front of me or on our website.
Are you looking for ways to promote your product or service to enterprise technology decision makers and influencers throughout the world, like the ones who listen to this podcast? Major Tom Productions creates media, events, and influencer marketing for B2B technology providers. Our productions are exciting, educational, disruptive, and effective. Most importantly, they create results. Our content is unlike any other in this industry, engaging, influential, and trusted by technology buyers and influencers throughout the world. Each month, our productions reach hundreds of thousands of targeted buyers and decision makers who trust and engage with our honest and tech-agnostic content. With long-tail viral results and engagement with our content, Major Tom Productions provides a way to reach your target market and create awareness, calls to action, and a connection with potential customers. So collaborate with us today. Learn how we can feature your product or service on podcasts such as Transformation Ground Control, Journey to S/4HANA, and Journey to Dynamics 365. We can also feature your brand on our YouTube channel called Digital Transformation with Eric Kimberling, which boasts over 100,000 subscribers and over 2 million video views per year. You can also participate in our in-person events, including our Digital Stratosphere Conference. Contact us today to learn more. We can tailor a marketing campaign that works for you. We look forward to helping more people learn more about and become engaged with your brand.
Hello, welcome back to Transformation Ground Control, episode number 202. My name is Eric Kimberling here at Darian Chwialkowski. You can find new episodes of this show every Wednesday at transformationgroundcontrol.com. The show is produced by Major Tom Productions and sponsored by Third Stage Consulting, which is an independent consulting firm that helps clients throughout the world with their digital transformation journeys. And speaking of independent consulting firms, we are going to have a guest on the show now who's a fellow principal consultant at another independent ERP consulting firm, technically a competitor. That company is ElevatIQ, based out of Canada. And Sam Gupta is joining us here to talk about top trends and predictions for 2025. So, Sam, thanks for being here today.
Of course, always good to be with you, Eric.
Absolutely. And you've been on here a couple times, but for those that don't know you and don't know your company, maybe talk a little bit about yourself, your background, as well as what ElevatIQ does.
Yeah, happy to. So Sam Gupta, ElevatIQ, been in the industry for roughly 20 years, covering digital transformation. And ElevatIQ has very similar focus as Third Stage, as Eric pointed out. So very, very, very similar focus in terms of the change management, any sort of enterprise software technology selection. So that's pretty much it from my side, Eric.
Absolutely. So how did you tell us a little bit about how you got into this space, or sort of how you grew up in the technology and consulting space? How did that happen?
Yeah. So, my background is with the system integrators, very large consulting firms, just like you, Eric, I guess. I mean, that's how you started. So I was doing very enterprise focused work, back in the day. So a lot of big SIs, my background is more into the implementation side of things. So that's why I probably bring a very unique perspective to this. So that's how I started. Yeah.
Great. Yeah. Similar upbringings, you and I have, and great minds think alike, but you and I also have differing opinions and sort of diverse thoughts on some of this stuff. So it'll be really good to chat through some of this here today. So Sam, just to sort of jump in, if you and I chatted about this before today, we chatted about, the list you've been compiling of some of the top trends you've been thinking about. You've actually adjusted the trends recently based on geopolitical stuff that's emerged, specifically the U.S. election here in recent weeks. You think that'll affect some of the trends we talk about here? Yeah. But if you're just to summarize before we sort of jump into some of this list that you have here, what would you say is like what sort of jumps out at you is like if you were to summarize and give us a headline of what you think we should expect in 2025? I know that's a tough question because there's a lot of different directions you can go with that, but what are your thoughts there?
Yeah, so I'm actually going to take the macro view that I generally take, me, how I work, I guess, right, and think. So I'm going to provide the overarching view of where everything is and why we had to update the trends. And obviously with trends as well, I mean, we are updating them on a daily basis because any variables that are sort of changing in the market, that impacts the global economy. And based on that, we are sort of observing and changing. But obviously we have to publish these trends yearly at point, so we cannot keep them on a rolling basis. But overarchingly speaking, I guess, previous administration versus the new incoming administration that is going to come in the US is going to have substantial impact on the global economy that we already know. I mean, we still have some of the after effects of pandemic that are still prevalent in the market at this point of time. And by the way, this all impacts the digital transformation market. It's going to impact how many ERP digital transformation projects we are going to get, okay? It impacts every single consultant that we have in the room, their career. So it impacts all of us, and that's why we start with the macro view, okay, how the overarching market is going to be. And this is also going to change the state of any of the movements that are happening in the industry, whether any of the companies are being consolidated, because that actually changes the whole architecture. It changes the game of the ERP. So going back to the macro view, right? So number one, I mean, the incoming administration that we have, they are going to have substantially different policies. They are probably going to reverse everything that the previous administration did, right? That's how politics work. Right. So some of the things that we are going to notice is that most likely it's probably going to be better for the economy. But at the same time, we know that the new administration is probably going to be slightly unpredictable. And that is something that market does not appreciate. So now how people are going to feel, how CFOs are going to feel based on that will dictate, how the economy is going to do. So our prediction is that probably in H1, I don't think we are going to see much changes as such, overall from the economy perspective. Maybe H2, there might be some changes. Now, coming back to your interest rate, right? So interest rate have sort of come down right now, but they are not sort of there yet for the market to gain confidence. There are some economies that are doing well, some economies that are not doing well. Global prediction is that right now, I guess, in 2025, we are probably going to have very similar global economy. US might do well. I don't know at this point of time, depending upon how things go. And that all is going to impact pretty much everything. So this is just the macro view, right? Now, we are going to touch on the macro view as we discuss the trends, but then, that is also going to have things such as your AI, how that is going to impact the market. So we'll be touching on that. I don't know if that provides a little background for you.
It does. It really does. Because then you think about, you touch on a couple really important points. One being the increase in, sort of M&A activity. I know that's something we talked about before this podcast or before today's discussion too, about how M&A activity will probably pick up. There might be more consolidation as a result. And that's something, as a buyer, you have to think about is, if you've got I know we can't predict the future. We don't know who's going to get acquired or who's going to merge with who as far as software technology providers, but it's just something to be aware of that's likely to affect the software space.
Yeah. So some of the comments there, I guess, on that. So some of the deals that were not going through in the previous administration, I think they are going to go through now, because this administration is going to be far more receptive, even if the market is going to be slightly more, I don't know whether you want to use the term monopolized or oligopolized, whatever you want to use. But, there is going to be a little bit more consolidation. The bigger companies are going to have much higher power in general. So let's go back to some of the deals of the last year that could not go through. Salesforce was acquiring Informatica. They were sort of hush-hush, I don't know, whether they wanted or not wanted, right? But that didn't go through. So now those kind of deals might go through, and that is going to impact the entire enterprise software market. The second deal, Google acquiring HubSpot, that did not go through. So now these kind of deals may go through. And what this does is it basically, I don't know whether you want to use the term bloat, or further consolidation of any of the suites that we are going to have in the market. And, from our perspective, we track roughly 200 different categories. So you obviously ERP is just one category. People sort of think about ERP, that ERP is everything. That's not how the market works. That's not how the categories work, right? So we are going to have ERP suite that is going to be further consolidated because of these consolidation reasons. Then CRM is a suite in itself. WMS is a suite in itself. Supply chain is a suite in itself. Analytics is a suite in itself. So there are many suites and categories are there, and they all are going to be consolidated based on how the market is moving. So depending upon how the forces move, I think we are going to see a lot more changes in the market, from the ERP perspective.
Yeah, it makes total sense. And it's interesting because you're right. We saw some early signs of that consolidation, and it's always been a thing, right? I think the tech space is always innovating. You're getting startups, but then someone will come along and buy up those startups, and it just creates it creates innovation, quite frankly. So, I think it's a good thing. And then as these smaller tech companies get bought up by the bigger ones, it just creates an opening for another smaller tech company to come around and fill some gap or fill some niche that the bigger guys aren't addressing well. What are your thoughts on? So one thing you mentioned in your list, you sent me, kind of your list of, is this like just for background sake, just so we all understand it, is this a list that you publish each year, or is this kind of your list of, okay. So one of the things on your list that jumped out at me, and we'll kind of go through, we probably won't get through all 15 of your predictions here, but we'll pick off a few of them. And actually, before I ask you this question, I'd love to hear from the audience just before we jump in. I'd love to hear from the audience what you think the biggest trends are. Like, what's the trend you're most excited about, or what trend do you have the most questions about? Love to hear your feedback. So please drop that in the chat, and we're going to come back to those comments here in just a minute. But one thing you had in here, Sam, that was really interesting, you had a lot of interesting points in here, but one was AI augmented agents and AI governance platforms. Help us understand that, because that's not something you hear a lot of people talking about right now. At least I don't.
Yeah, so I guess, this is definitely going to be one of the trends that is going to be prominent. And I'm going to give you some more background there, why this is a trend in the market, right? And that is probably going to sort of connect with another trend that we have on our list. So number one, thing is the overall market pressure, right? The enterprise software vendors at this point of time, if you look at their revenue pressure, they are feeling pressure, and they have to do something about it because the demand is not as much as they would want, from the growth perspective. Investors are looking for, hey, give me like 15% growth, 20% growth, 30% growth. That is not happening. So they are asking for that. So because of that price pressure, now how do you justify your license price? So they have to come up with something. So what is that something at this point of time, right? So either you are going to sort of consolidate, bring the synergy so that your deal size is going to be bigger, or you have to promote something at this point of time. If you look at companies like Salesforce, they are positioning themselves as, hey, I'm probably going to have 1 billion agents in next 5 years. I don't know what was that timeline, but they are very aggressively working on that. And the only companies that are doing well on Wall Street at this point of time from the tech perspective, they must have some sort of AI flavor, because all of these AI agents, for you as a buyer or the consumer, you might not feel as much of a difference, but the vendors are working on these capabilities because that is where they are going to make money. That's how they are going to justify their price tag. So every single category in the market, whether you talk about CRM category, HCM category, ERP category, all of these are going to have these AI agents embedded in that. If you look at some of the enterprises are actually going to drive the experience. Okay, we are already noticing, and I don't know, Eric, whether you have been following a lot of people, who are in the recruiting space at this point of time. Okay, they are already feeling that, because recruiting is where you have the sort of labor of love, is what I like to call, right? That's where you have a lot of manual effort, for the recruitment team as well as for the candidate, right? So what they are doing is they have already implemented some of these AI agents, and the candidates are reporting this is the first time in the history, that they are saying that I actually like recruitment flow. Can you believe this? Okay, because everybody hates recruiting. Nobody wants to apply. I don't think anybody has ever said that, okay, I really appreciated this whole recruitment process with a company, but at this point of time, when they are interacting with these AI agents, they are appreciating that. So this is the front end part of the process. Now, the similar process is going to be there whether you are, coming as a customer, because if you look at the traditional bots, they were extremely boring overall from the experience perspective. But now this experience is going to be far more interactive. So we are going to see these agents, embedded with every single category, whether you are going to look at the front end, back end, and then this is going to be the whole flow. Because of that, there's going to be another category that is going to be created, which companies are already working on that, which is going to be governance platform. There are going to be compliance issues from the government perspective. They are mandating. Right. So there are going to be new categories of software, I guess.
Yeah. Super interesting. Yeah, that's really, really interesting. It's exciting to think about how we've only scratched the surface of how AI is going to impact enterprise technology and how it's going to impact businesses in general. So it's exciting to think of how some of these trends will unfold like you're describing here. Here's a follow-up question from the audience I think is really interesting. This is from Timothy on LinkedIn. Timothy has a prediction. He says, AI-driven platform consolidations with the drive for optimizations. If a tool or service isn't feeding the company's AI choice, then it will be left out and diminished value contribution. So I guess that's a question. How important is AI for these enterprise tech providers that aren't, sort of legacy AI providers, if you will, or they're not standalone AI providers? What do you think of Timothy's prediction here?
Yeah, so this is very interesting, and it's always a very interesting debate. And I always like to sort of, segment the perspective. Whose perspective are we talking about? Are we talking about investors' perspective, or are we talking about consumers or buyers' perspectives? Okay, so investors, they are going to have very different priorities, because they are, in most cases, they are probably investing for long term, especially the investors that are investing in AI at this point of time. Okay, so they don't want to miss the bus. That's why they are investing, right? So they are going to take slightly more long-term prediction, and even if they might not get anything in the next year or two, they are probably going to be okay, depending upon the strategy of any of the hedge funds or any of the private equity that are actually investing in AI. But overall, I guess, this is slightly more drastic, I would say. I don't think it's going to be as extreme, regardless of whether you are going to utilize AI in your workflows or not. I don't think there is going to be as much impact. Obviously, we will find that out probably in next 4 or 5 years, how that is going to be. But as companies adopt The customer experience is going to change, the employee experience is going to change, and that is going to dictate, how much value companies are getting, and based on that, they will decide. But it's not that the companies are going to become irrelevant, I guess, if they don't use AI at this point of time. I think that's slightly more extreme.
Yeah, that makes sense. Now, how about one thing actually, before I move on, I don't want to miss this point because I don't want to ruin the flow here, but this is from Andy on LinkedIn. This is an interesting question he's got. Andy says, embedding an AI agent brings many issues such as integration and upgrades. A better solution is for the software provider, such as Oracle, to have AI built into the core product. A bolt-on AI solution carries baggage. What do you think? So it's kind of coming back to this point of standalone AI versus AI embedded within enterprise tech. What are your thoughts here?
Yeah, so this is also very interesting, and you are absolutely right, Andy, that we are going to have newer problems. We are going to have interesting problems. The debugging, the maintenance of these AI workflows are going to be far more difficult because now machine is sort of controlling your workflow, and that's where you are going to see a lot more categories. Eric, if you don't mind, can you bring the comment?
Sure.
Yeah, so I can keep touching on that. So so obviously the AI workflows that they are going to have, it's actually going to have more tools that are going to be there. So these are going to be newer categories, and that's what is called the AI governance workflows. And as the regulation changes, because at this point of time, we don't know how governments are going to react. Some are slightly more extreme, some are, they are sort of watching at this point of time, what is going to be impact. I mean, I don't want to create policies if there is not going to be much of an impact. They don't want to block technology. They want to see how the impact is, and based on that, they are going to decide, and that will impact, how the reporting is going to be, how the compliance is going to be, what kind of debugging we need to implement as part of our AI workflows. So I think the point that they are trying to make, Andy is trying to make, is a better solution is for the software provider to have AI built into the core product. Sure, I mean, that's what the software vendors are going to do. You are not going to know much from your perspective. I mean, it's only going to be that, okay, you probably have superior customer experience or employee experience, or the user experience, right? That's what you're going to feel. But as such, when you are going to debug these workflows, it's going to be much harder. So they are going to provide more tools. So obviously, it's a big revenue stream for them. And then you probably need to have more tools for yourself as well, because tool is a tool. You still have your processes, you still have data. So you need to sort of combine them together and figure out, okay, what is happening with these tools, with the newer processes, especially the ones that are going to be AI enabled. So we are going to have a lot more need for the traceability, I guess, if I could use that term. And then AI is also going to help with traceability, because now what AI can do is, it can sort of mine the data, provide you the insight. So, and the whole research that is happening in the AI space at this point of time is the auditability of AI. So they are still working on that. It might not be as accurate, but there are going to be a lot of research and development in that space for sure.
Yeah, really interesting. What about, here's an interesting one I think might stir up some controversy. And I'm glad you have this in your list, because it's something I think is a problem or opportunity, depending on how you look at it. But your number 4 on your list that you sent me in advance was cloud and SaaS expense reduction and SaaS licensing price pressure. Tell us about that. What do you mean by that?
Yeah, so I mean, we are already seeing this, right? And Eric, I'm pretty sure you have probably tracked this as well. For example, right now, again, going back to the price pressure, right? They have to create revenue somehow. So how do you create revenue? And with cloud, in general, the vendors have a lot more power in terms of what they can do. Even if they make a minor change, you are not going to. It's going to be a minor change just from the tier to tier, right? You have tier 1, you have tier 2. Tier 1 may have, they might have these limitations baked in the contract that, okay, you are only allowed, I don't know, maybe 500,000 transactions. Even if they say that, I have user-based pricing, but you have these limitations baked in the contract. Sometimes they are going to be spelled out. Sometimes they are not going to be spelled out, right? So because of the price pressure, what is going to happen is, if they are struggling with the revenue, they are going to increase the price. For example, let's say you look at categories such as your Smartsheet, Monday.com, Airtable. These 3 are newer categories. All of them are $1 billion. in ARR at this point of time. That's how hot these technologies are. I don't know how many ERP vendors have a billion ARR, right? Right. So these are the categories, and they started, very small. They started, creating a new category called collaboration. The collaboration was always difficult, from the client interaction perspective. Sure, you had a bunch of portals, you had a bunch of commerce gurus that were saying that you have collaboration, but the collaboration wasn't there as much. So that's what categories such as your Smartsheet, Monday.com, they changed with respect to collaboration. But initially what they were doing is, hey, I'll give you a collaborative user for free, just the way Acumatica prices their product, right? But now they said, you know what? Now I don't know. I'm going public. A newer private equity, acquired them, and they are actually going to change the price, and that price change could be substantial for you. So this is going to be across the categories, across the software. So any of the SaaS categories that you are using, you might get a surprise bill of $1 million, $2 million. And what are you going to do after that? So that's going to be a challenge that we are going to see, depending upon how good the market is doing. If the market is doing good, then they don't have as much price pressure. Then they will try to acquire more market share. But if they are not able to grow because of the demand, then they have to find ways of doing that. And that's where you are going to get this. We have already seen this in 2023. You are going to see a lot more in 2025.
Right. I'm here with Sam Gupta from ElevatIQ. We're talking about the top trends and predictions for 2025, but we've got a lot more to cover. We'll be right back with more Transformation Ground Control. My name is Eric Kimberling, and I'm the CEO and founder of Third Stage Consulting. Before we dive too far into today's content, I want to invite you to learn a little bit more about Third Stage Consulting, who we are and what we do. I've included a link to a video right here that describes Third Stage in a bit more detail. It talks about our story, our history, our philosophy, our clients, our service offerings, and that sort of thing. But in general, what Third Stage Consulting does is we're an independent and tech-agnostic consulting provider. We help clients through their entire digital transformation life cycles, beginning with digital strategy, software evaluation and selection, all the way through and including implementation planning, implementation readiness, and the actual implementation itself. We're technology agnostic, so we only represent our clients' best interests. We do not represent software vendors. But having said that, we work very closely with software vendors, all the leading players that you can imagine we've worked with, both in helping clients evaluate and select them, but also in helping clients implement those solutions as well. So we have a very broad, objective, agnostic view of the market that is meant to really represent your interest as you go through your digital transformation. I also encourage you to scan this QR code right here to get access to our resource center. This resource center has a ton of information, a ton of ebooks that are free. You have access to top 10 software rankings, playbooks for how to make your project more successful, guides to change management, YouTube videos, all kinds of stuff that are going to help you through your digital transformation. So I encourage you to scan this QR code to get access to those resources. And please feel free to reach out to me directly to brainstorm ideas about your project. Even if it's just informally, you want to bounce around some ideas and get some informal advice, I'd be happy to spend some time with you. So feel free to reach out to me. I've included my contact information below. You can also find it in the description field of this video as well.
The last thing you want to have happen is for your digital transformation to end up in court. I've been doing this for 20 years and I have seen everything. My name is Marcus Harris. I'm a software and technology attorney focusing my practice on drafting and negotiating software-related contracts and litigating software disputes across the country. Feel free to reach out to us at taftlaw.com. We'd love to talk to you about the litigation process and what you can expect.
Hello, welcome back to Transformation Ground Control, episode 202. My name is Eric Kimberling here with Darian Chwialkowski. You can find new episodes of this show every Wednesday at transformationgroundcontrol.com. This show is sponsored by Third Stage Consulting and produced by Major Tom Productions. So thanks for being here today. I'm here with Sam Gupta. We're talking about the top trends and predictions for 2025. And I also think, one of the predictions I had too, and I'm curious to see what you think, because I feel like there's going to be a bit of backlash a little bit against the whole cloud and SaaS subscription pricing model, because you're right. I mean, there's this push to drive this annual recurring revenue. You used the term ARR a minute ago, and that's what investors want. They want to see annual recurring revenue, but these are investors for the software vendors, so it helps them. But the question is going to become, at what point do customers push back and say, hey, this is too much of a spend? This is our OpEx costs have gotten out of control now. We've gotten rid of a bunch of capital expenditure over here by not having these on-prem systems that we depreciate and have to maintain and all that stuff. But now we've just shifted those costs over to an OpEx, and now that OpEx keeps going up. At some point, they're going to have to push back. I mean, it's just natural pendulum swing type stuff that I would think is going to happen there.
Yeah, so I don't know if on-prem is going to be the future, to be completely honest, because it's not going to get as much R&D. I mean, don't expect any AI, development on that. It's not.
I don't think cloud's going anywhere. I just think the cost pressure is where you're going to see the shift. To your point.
Exactly. So let's see. I mean, it's very early to predict at this point of time how that is going to go. Obviously, vendors are going to have a lot more cloud. Yes, the vendors are going to be competing with each other as well. But at this point of time, I mean, the pricing is fairly even, I would say, across the vendors. Some are going to be slightly more expensive, but depending upon how commoditized it gets. Depending upon how much control they have on the installation. With most ERP, I mean, you are looking at roughly 2-3 years, right? So they have a lot more pressure in general on the customer. They have a lot more control in the cloud. So they don't really have an incentive to reduce. In fact, I mean, in general, the way most enterprise software vendors, the way they work is they are going to substantially discount. And you know this, Eric, right? How this works. You get in a deal, you are going to get substantially discounted price. And as soon as you go live, your price becomes, 2x, 3x, 4x.
Right. Yeah, that's true. It's very true. Here's this is actually there's 2 points I'm going to get to from Suhail on LinkedIn. I'm going to start with one around some of the geopolitical stuff you were talking about a moment ago, Sam, when you first started talking about this.
Yeah.
You were talking about some of the, how does the incoming U.S. administration affect the global enterprise tech space? And so Suhail on LinkedIn says, from a political standpoint, I see that U.S. leadership wants to move manufacturing from Canada and Mexico back to the U.S. Hence, companies will invest in manufacturing ERP systems upgrade implementations in the U.S. and Canada, and Mexico will see a slump in manufacturing ERP upgrades and implementations. So I'm curious what your thoughts are. Do you think do you think we'll see that? Do you think you'll see more activity now in the U.S. for ERP types of projects and maybe less in other countries where manufacturing is being moved away, or is there an opportunity for technology to help some of these displaced manufacturers be more effective, or what do you think about that?
So this is a very interesting point, and I think we have heard this a couple of times. What is the impact of supply chain on any software categories, I guess, right?
Yeah.
So number one thing, I guess, any software, enterprise software, is a model, and model requires some sort of streamlining, stabilization. If the stabilization is not going to be there from the geopolitical perspective, if that is going to be sort of the moving target, you cannot define your processes. So overall, in my perspective, I don't think the changing supply chain have the direct impact on the software processes. If anything, if there is going to be a lot of movement, companies are simply going to slow down the process that, okay, I'm not going to change anything right now because we don't know how my targeted state is going to be, right? So overall, I guess, from the geopolitical perspective at this point of time, and that's what the uncertainty part I was talking about, that, okay, the new administration, US administration is threatening that, okay, they are going to have these tariffs, but I don't know whether tariffs are going to go through. If the tariffs go through, then there is going to be a different problem. I mean, tariffs are in general very inflationary. So we are going to have impact. So now because of that, are we going to get recession? Nobody knows. We have to see how these forces are going to work together to be able to understand, what is going to be the overarching impact. But there is a possibility that, US might get a lot more manufacturing in general, the kind of controls that they are going to be putting in, the kind of incentives they are going to have. But it will take a long time before we understand whether you are going to have the real impact on the supply chain, and do you need to change the processes because of that?
Yeah. And speaking of that, one of your, maybe I'll just pull this out as one of your number 7 prediction here was geopolitical impact on business processes. So, and you just mentioned that. So to maybe expand on that a little bit, if you don't mind. What do you mean by, how do geopolitics affect business processes in particular?
Yeah, so geopolitics is going to have impact on the overarching, business dynamics, and that is actually going to change your architecture and the consolidation. So because of geopolitics, okay, if the market is going to go down, then you are going to see a lot more consolidation. If you have a lot more consolidation, from the value chain integration perspective, whether you talk about manufacturer, distributor, or you talk about software consolidation, each of this is going to have some sort of, impact on the business process, when you are going to buy the software. So geopolitics has impact, from this force perspective, but it may not have the direct impact from the supply chain perspective. If the supply chains are going to be displaced because of that, whether there is going to be impact on the software or not. This is more from the deal flow perspective, slightly more macro view, as opposed to sort of the what is that called, the four-wall planning, the factory planning view, I guess, company planning view.
Yeah, and another one that's similar that you had on this, which is actually your number 6 prediction, was continued reallocation of skill sets and their impact on business processes. So kind of continuing with this business process theme and the changes to business processes. What do you mean by reallocation of skill sets, and how does that impact business processes?
Yeah, so going back to the AI agent prediction, I mean, that is definitely real. We are going to see a lot more. That is probably a very near-term prediction, I would say, that you are going to see a lot more in general, whether that is going to be driven by large enterprises to their vendors, to their suppliers, or if this is going to be more of the consumer behavior and they are going to drive this change. So overall, I guess, based on these workflow changes, because now whatever workflows humans were doing, so either the workflow for humans is going to be augmented because they are going to probably do a little bit more value-added activities, whether it is going to be just the debugging or support. So from the customer experience perspective, initially, let's look at a workflow of a customer support agent. Traditionally, they were trained maybe on, I don't know, maybe 1,000 questions. Okay, I'll teach you 1,000 questions you are going to support. And we all know how much we hated, the support, because we never get the answers that we are looking for from the support perspective. Now, AI agents can be trained on maybe, I don't know, 10,000, a million scenarios. So they are obviously going to be a lot more intelligent. So they might be able to do a lot of heavy lifting, but then obviously you are going to have an option that, okay, if you're not satisfied with the agent and if you want to go to the agent right away, then obviously the agent is going to have the workflow. So now the agents are going to require a lot more training, because they need to understand what has AI agent done. So that's where your reallocation of the responsibilities is going to be overall, in the enterprise, whether you talk about from the customer support perspective, where you are going to have AI workflows, from the finance processes perspective. So that is also going to change from the skill set perspective. The kind of skill sets that people are going to require is going to be very different. So there is going to be a lot of reshuffling. And based on that, your ERP processes are going to change. Whatever you have done in the past may not be relevant anymore in the new world. But how soon that is going to be is a question.
Yeah, very interesting. Here's a interesting question from LinkedIn. This is from Menawendra on LinkedIn. He says, how would you predict fintech and healthcare going the cloud way? With trillions of bytes of data sitting on mainframes and resistance to spend on the cloud, majority of above said industry leadership feels spending on cloud migrations can be delayed, and they prioritize the spend on the customer experience or operational efficiency front. What's your view around the business transformation around these industries? And again, that's around fintech and healthcare.
Yeah, so fintech and healthcare, they are very interesting industries. They were never sort of the core enterprise software, core ERP-centric industries, because they were almost like IT shops, to be completely honest. They had a lot of custom development. I mean, you are looking at roughly 3,000, 4,000 internally developed applications. We have seen some changes there in the market. Overall, if you look at, tools such as your ServiceNow, now they are doing a lot more development because they are taking slightly more platform-centric approach. That's where Palantir is getting a lot of momentum because they are doing a lot of platform-centric approach. But overall, I guess, with this question, when is mainframe going to go away is the question, I guess, right? And it's not that companies have not tried. They have tried. For example, let's say I'll take an example of airline, because airline is a very interesting industry. It's very unique. People sort of talk about it. People kind of say that, an ERP consultant can probably fix the airline. We were having these interesting debates with, and Eric, John Reed as well, right? In his room, that, they were all talking about airline, how much we are going to do this. But they don't understand that, okay, any of the ERP systems that were designed for the entire industry, they were slightly different, okay? So, and the reason why they were different is because the number of touches that you have in the processes is almost like millions, okay? So if you look at the supply chain suite, when you look at the internal supply chain and you look at external supply chain, okay, these two are two different things. With external supply chain, you are looking at, I don't know how many touches. Similar scenario is there for the airline as well. With the airline, you have the travel agents that are touching some of the traditional mainframe system, and the workload is so high that any systems, at least the modern UI based systems, they are not able to replace that, because the amount of overhead that you get with these UI driven systems, for example ERP systems, the processes are not able to handle that. And that's why they were never able to replace those mainframe systems. Now, is that going to happen in the new world? Possible. Okay. Now we have things such as your Palantir. They are much better. But again, that's not the application platform as such. So we are going to see a lot more platforms in the market that are going to probably be able to do similar workload lifting that was possible in mainframe. So there is a possibility. We are not there yet. We have seen these scenarios. For example, let's say if you look at E2opens of the world, you look at Blue Yonders of the world, they are able to do a lot more. But we have also seen, Blue Yonder cybersecurity issue recently.
Right.
So it's hard to believe,
right?
How much they are able to do, how modern their code is, to be completely honest, to be able to replace these things, because they were, obviously very good. I mean, we have not had any issues, at least from the security perspective, from the transactional processing perspective. They at least work.
Right. That's true. Yeah, very true. And here's an interesting question, which I like this question because it sort of bridges the gap between these longer term predictions and sort of short term where we are right now. This is from Ashish on LinkedIn, and Ashish says, Eric and Sam, for organizations just starting with AI agent integration and ERP, what low hanging fruit or quick wins are popularly seen? So this is a kind of an interesting dilemma that a lot of companies have, is they see this future possibility and all the future opportunities with AI, but then the question becomes, well, we're not going to do that stuff overnight. All this great stuff you've been talking about, Sam, isn't going to happen overnight. So what sort of smaller incremental steps have you seen companies, or have you seen companies taking any low hanging fruit types of approaches to AI?
Yeah, so this is a very interesting question. And again, from the ERP or integration perspective, I don't think things are going to change much. Okay, so in my mind, I think what is changing is almost like an ingredient of the dish or recipe that you were cooking. Okay, so now this is going to change more from the vendor perspective. They are going to provide you these capabilities. It might change your workflows, but as such, you don't have to do much. You simply need to understand the workflow. So things are going to change a little bit from the implementation perspective, but not necessarily from the integration perspective, I guess. That would be my take. Each of these systems are going to be slightly more, I guess, better in user experience?
Yeah.
Right. But as such, I don't think you can buy AI agents and integrate them with your ERP. If you're going to do that, that's probably going to fire back in my mind.
Yeah. Yeah, absolutely. Now, you had another one here. Okay. Here's another prediction you had on your list. Number 11 on your list was continued digital transformation failures and a focus on enterprise architecture. You would think so you and I have been doing this for a long time, right? You would think after all this time of you and I being in the space, some people have been in the space for longer than us, obviously.
Yeah. Yep.
But I think we have all seen sort of similar patterns over time. And companies keep making the same mistakes in terms of how they screw up these projects. But at the same time, technology is advancing. You would think that technology is getting easier. It should be easier to deploy. You would think transformation failures would be going down. But you and I both agree on this point. They're not going down. They're actually, in my opinion, they're increasing. But what are your thoughts here? Why are these failures? First of all, why do you think these failures are continuing to happen, and what could companies do to do things differently?
Yeah, so Eric, I guess, we have discussed this, right? So one thing that we both agree on is overall, if you look at the underlying reasons why these failures, happen, it's always going to be some sort of misalignment, misunderstanding in terms of how to make them successful. You are going to have these premeditated notions that this is how I'm going to do it. I'm going to hire companies like ElevatIQ, Third Stage, and they are magicians, and they are somehow going to fix it, right? That's not how these implementations work. Okay, and there is also a big misunderstanding in the market is that somehow these cloud systems are easier. You don't necessarily require as much expertise. I actually say the opposite. Okay, cloud is much harder. Cloud is much harder than on-prem. With on-prem, things were much easier. And the reason for that is because you had a lot more control on your code base. You had a lot more control on your database. That control is not there in cloud. With cloud, your pricing layers are very different. The pricing layers are very crafty. They are designed to sort of get foot in the door and then probably increase afterwards, right? And now with all of these changes, whenever you are going to have uncertainty in the market, what is going to happen is you are going to see a lot more overlap in the categories. And when we say categories, we are talking about 200 different categories that I mentioned initially. ERP is a category. People are super confused what an ERP is. There's a lot of misunderstanding in the market. Everybody's ERP in 2024, 2025. Likewise, CRMs are becoming bloated. The analytics suites are becoming bloated. Every single category in the market is becoming bloated. Now you require real expertise to be able to understand which process is going to belong where. And how do you find that clarity? Okay, that's where people are going to struggle a lot, because that drives everything from the master data governance perspective. If you cannot figure this out, if you're simply going, okay, feature 1, feature 2, feature 3, I'm going to put it here, that's not going to work.
Right.
And that is also going to impact your licensing. So that's why now, based on the consolidation that we are going to see in the market, based on the category overlap, unless we have clarity, from the category perspective, that clarity is not going to happen. The vendors are not going to listen. Everybody's trying to go after pretty much every single capability out there. So it takes time before they mature and they figure out that probably I should not be keeping this, right? But that's not happening in 2024, 2025, when they are really struggling for revenue. They are trying their best to do whatever they can do in their power. They are trying to acquire as many capabilities, and these categories are going to become thicker and thicker, and the confusion is going to be there. And that's why we are going to see a lot more failure in general.
Yeah, I agree. And there's also the impact to the businesses too. You talk about the control or the lack thereof, the lack of control you have over your own code. It's also, the lack of control over your own operations, business processes, which you've alluded to too. So in other words, in the past, for better or for worse, you could take your on-prem system and you could customize it to do whatever you wanted it to do. And it made the adoption a little bit easier. Now you could argue that you got diminished business value, because if you're customizing things in the software, maybe you're creating too much risk or complicating things more than you need to, but you could do it. But now with cloud, you have limited flexibility. So it's sort of creating more disruption in the upgrade or in the implementations themselves, which is part of why, we've gained some things with cloud technologies, but now we're creating more risks in other ways too. And that operational and organizational change side of things, I think, is where you see a lot of that pain.
Yeah, could not agree more. I think both of these things are super connected. So when I say you are losing flexibility meaning you cannot do whatever you were able to do in the on-prem world in the cloud, because you are going to run into limitations, and that will not allow you to modify the way you are modifying. The other point that you need to understand is that you may have lived with these customizations in the past, but it's going to be much harder in 2025, 2026. And I'll tell you this, okay? With AI, one of the things that is going to be really stronger, and that we have not touched so far on our list, Eric, is going to be the whole cybersecurity space, okay? So with cybersecurity, I mean, if you look at how hackers operated, their mindset always was, hey, I'm a hacker, my job is to create biggest impact. My job, if I'm putting my life in danger, I need to make more money. Right. That's how they think. So they were only targeting, let's say, the bigger organizations. So smaller organizations, even if let's say your workloads may not be as secure, you may have a lot of customization, you are managing somehow, whatever, you hired a 20-year-old guy and somehow they were managing your workloads. That is going to change, because now you are going to have AI. They have access to the same AI that you do, right? So now all of these small vendors can be targeted very easily. So what are you going to do? You just don't have the same capabilities. If you are going to have a lot of customization, even and Eric, again, I have a little bit more technical background, so I can talk about these things, I guess, right? Sure. So even a single line of code can be vulnerable. Okay, when you are customizing your ERP process, you are probably writing millions and millions of lines of code, and you are disrupting the state of the other pre-built processes or pre-built functions that were tested by the vendor. And by the way, you are actually going to void the warranty because they are only responsible for their own estate. If you are going to disrupt their estate, then they are not responsible for that. So they are not accountable. So you are sort of taking that risk. So now in the new world in 2025, if you are going to customize a lot, we are going to see very interesting trends that, okay, we are going to see a lot more cybersecurity issues. We are going to see a lot more issues similar to CrowdStrike that we saw in 2024. So now we will see the real impact of software supply chain. And we have already seen that software supply chain is as powerful or more powerful than your real supply chain that can disrupt the whole world. So once government understand, because right now 90% of the government, they sort of get it, but they always feel that IT systems are all back-end, we are not going to have as much impact. So there's not real pressure from the government in terms of how these things need to be monitored. But there will be regulatory changes once they learn that this could be as disruptive. They have already seen and they are already thinking about it.
Yeah. I'm here, Sam Gupta from ElevatIQ. We're talking about the top trends and predictions for 2025, but we've got a lot more to cover. We'll be right back with more Transformation Ground Control. I recently published my first book. It's called The Final Countdown, Strategies to Reach the Third Stage of Digital Transformation. And I wrote this book because I really wanted to find a concise way to share some of my knowledge around digital strategy and how to get started on a digital transformation journey. So in this book, I cover 3 different sections. I cover the people, process, and technology aspects of transformation, with the idea that it's meant to be a starting point, a launching pad for organizations and team members that are going through digital transformations. So I encourage you to buy this book. You can get it electronically, you can get it paperback, or you can get it in hard copy as I'm holding here in front of you. You can get it by going to thefinalcountdown.com. You can also search for it on Amazon if you shop at Amazon. Otherwise, just go to thefinalcountdown.com. Love to hear your feedback on this book as well. So I hope you check it out and hope you enjoy.
Interested in working for a company that truly values your unique skills and experience? Here at Third Stage, we don't hire based on resumes alone. We look at the full candidate, experience, and willingness to provide excellent service for our clients. Within a technology, independent, and agnostic consulting firm, you have the opportunity to learn across industries with a diverse group of clients. Our consultants also have the opportunity to diversify their portfolio and learn across technology systems. If you're interested in joining a high-growth entrepreneurial organization, please reach out to us at work@thirdstage-consulting.com.
Hello, welcome back to Transformation Ground Control, episode 202. My name is Eric Kimberling here with Darian Chwialkowski. You can find new episodes of this show every Wednesday at transformationgroundcontrol.com. This show is sponsored by Third Stage Consulting and produced by Major Tom Productions. So thanks for being here today. I'm here with Sam Gupta. We're talking about the top trends and predictions for 2025. Back to the cybersecurity thread you were just talking about. John on YouTube has a question here that says, I'd like to know your perspective on zero trust architecture governance in 2025. Key drivers. And I'm aware of, just as a disclaimer, I'm aware of zero trust at a high level, but I am not an architecture or cybersecurity guy at all. So I don't know if you know much about this, Sam, or if you have any thoughts on zero trust architecture and what your thoughts are.
Yeah, I would rather not comment on that. I'm probably not qualified to comment.
I'm not either. So sorry, John. It's one of the few times you'll stump both the guest and I. So we should do like you should get a reward or something, or an award.
We need to get a cybersecurity guy here, Eric.
Yeah, exactly. Here's what I think you can answer. I think both of us could probably answer this one. This is from Ashish on LinkedIn. She says, any recommendations how businesses can invest in upskilling their workforce to adapt to the upcoming AI-enhanced ERP era? It's a good question.
It's a good question. So I guess right now, if you are going to do anything, I'm not sure how that's going to go, to be completely honest. It's too early. So in my mind, what I would do is monitor the changes in terms of what is happening and what kind of skill sets are you going to require. And obviously what everybody does is they simply watch their competitors, what their competitors are doing. And everybody is simply going to follow, right? So depending upon what is happening in your industry, how receptive companies are with these things and how the business processes are changing. Because one of the things that we are going to see is the whole customer experience changes. And as soon as that changes, either they are going to have some sort of impact on their deal. If they are able to sell cheaper, then obviously you are going to lose a lot. So then you have to think about those things. So those are going to be drivers. At this point of time, I don't know if you can do anything about it unless you are some sort of tech organization. Then it's a different case, because then you are getting pressure from your investors in terms of what you are doing for AI. But as such, let's say if you are end user, manufacturer, distributor, retail, these companies, I don't know what you can do right now, to be completely honest.
Yeah, and I think if there's any change management practitioners or experts on the session here today, I'd love to hear your thoughts on this. But the way I view AI and how it affects upskilling in the future is I feel like it's an organizational design discussion, because you have to first define, well, okay, AI is AI, right? Like to your point, I totally agree, Sam. If you're a tech person, then yes, there's a lot of upskilling you need to do in terms of the technology behind AI. But if you're just a frontline employee, and how do I upskill my frontline employees to be AI enabled or to be prepared for AI? It just depends on how the job is going to change. So if I'm like if I'm a plant, let's say I'm a material resource planner and I plan production, for a manufacturing company, and I've spent all these years using spreadsheets and complex manual ways of figuring out what the right production schedule is for my organization. Now you're telling me AI is going to come in and change that job. Well, first you have to figure out, well, how will AI change that job? And then what are you going to do with the time it potentially frees up? So if I free up 50% of that planner's time, then what do you want that person doing? And what, a lot of times you hear a lot of refrain about how, well, now we can be more strategic instead of doing all these manual processes. Now we can spend our time being strategic. Okay, well, what is that strategic? What does that mean? Like, what do you expect that person to do? And then that will give you the answer of how you want to upskill that particular person. I think I agree with you, Sam. There's no blanket recommendation we could really give that says here's how organizations should prepare for AI in general, other than to say define what you want your processes and your people's jobs to look like, and then figure out what the gap is. What you're going to need to train them or upskill them. It's probably going to vary greatly depending on who you're talking about within any given organization.
Yeah, could not agree more.
Yeah, good stuff. So I want to come back to another point you had here. You number 15 on your list was race to quantum technologies. This is another one that I hear a little bit about this, but again, I like that you're drawing this out because I think it's super interesting. But first of all, help us understand what quantum technologies are and why you think this is becoming such an emerging trend.
Yeah, so quantum overall, I guess I'll give you the layman's version, and I'm pretty sure, Eric, you probably already know it. I don't know, how many listeners are going to know about it or not. But overall, I mean, traditional technologies, the way computer systems are designed, we were in sort of ones and zeros, right? So everything needs to be translated in ones and zeros. It was very binary experience, right? With qubits that we have with quantum, now they can do a lot more processing. So that's why you are going to get a lot more multiprocessing that was not possible with the traditional computing systems. So that's where you are going to get the firepower of the processing. The challenge that we have in the market with respect to quantum technologies is that they are not as accurate, because when you are going to do this multiprocessing, they sort of collide. They are not just as accurate to be used in the real world. And there are other challenges. For example, one of the things that you have, I don't know whether you have heard this term called Q-Day. And Q-Day is going to be the whole quantum cryptography, and they are talking about that there's going to be this issue of the Y2K, in the new quantum world, because each of the encryption algorithms, the way they were designed, and if listeners are not familiar with encryption, then any of the secure communication that you have at this point of time, that happens using your encryption algorithm, and that is actually going to break with the new quantum technologies. So Q-Day is going to be almost like Y2K, that I don't have the year numbering scheme that is sort of scaling up. So What do you do? So that's where a lot more research is going to be. Now, why is that more important right now in 2024, 2025? The reason why it is important is because of AI. AI, if you look at AI, is really struggling at this point of time. They just don't have as much processing power. They are really bottlenecking this more from the energy perspective. They just don't have that. So that's where the quantum becomes far more relevant now, that, okay, you need to expedite the research for quantum if you want to capitalize on AI capabilities. So this is going to be a race, okay? Whether you want to be ahead with your technical capabilities or they are going to slow down a little bit because AI is too powerful. We don't know at this point of time what's going to happen, okay? Based on, what is going to be ahead. Is it going to be technology or the government or the regulations are going to be ahead? But in general, right now, governments are really excited. They are investing a lot more in the quantum technologies at this point of time. Again, that is very much in the R&D phase at this point of time. That is not going to be in the commercial phase that you are going to see any sort of business value, I don't know, maybe in 10, 20 years. But if we had forecasted 10 years back, okay, what are we going to see from the AI perspective? Nobody would have predicted that, in 2024, we are going to get ChatGPT.
Right.
But here we are, we have that, right? So right now, governments are really excited about quantum technologies. They are investing a lot more in research. They are prioritizing that because there's a real money to be made. And that's what everybody wants, I guess.
Right. Yeah, no, that's makes total sense. And then speaking of that, you touched on this, but number 12 on your list is energy efficient algorithms and computing. So is that sort of what you're alluding to there with like the impact or the prerequisite for having lots of power to fuel AI and the data centers that in the energy consumption that it's putting demands on?
Yeah, so both, I would say. So overall, I guess if you look at the state of algorithm at this point of time, right? So when you write a program, Eric, it's not going to be as efficient. You simply write something because you don't know what you're doing at this point of time, right? You sort of learn over the period of time. You sort of optimize once you learn how the algorithm is being used. So that's the state of any sort of technologies, AI technologies that we have at this point of time. They just don't know enough about that. And those are not necessarily optimized. They are optimizing. And because of the bottlenecking of the energy, so now there are going to be two things or two drivers that are going to be there. Number one is going to be that, okay, they are going to make the code itself very efficient. So that is one driver, because if they don't do that, then they are sort of going to bottleneck and they will not be able to release as many features. And because of that, investors are not going to invest. That you committed for something, now you are not able to deliver. So that's one force. The second force is going to be that we are going to see a lot more investment in the energy technologies in the market. So you are going to see that a lot more as well as a macro driver. So I guess it's both ways. It's not just one way, I guess, Eric.
Yeah. Makes total sense. And then one thing I want to come back to too, this is number 8 on your list, and then we'll close out with a couple audience questions. But number 8 on your list, that you alluded to this before, but I want to dive in a little bit more if you don't mind. And that was, there's more disruptions caused by supply chain and cybersecurity issues, or software supply chain and cybersecurity issues. Help us unpack that a bit.
Yeah. So I guess right now, if you look at the geopolitical risk from the supply chain perspective, again, we don't know at this point of time. There is a prediction that, at least the Ukraine war is going to stop. There's a prediction that there is going to be something in the Middle East. We don't know, if that is going to happen or not. You look at some of the other geographies. I don't know whether you heard this news today morning or not. South Korea, North Korea, they were always, there was a little tension there. China, tension there. So there's a lot happening, I guess, in the market overall from the supply chain perspective now. So we don't know, how this is going to happen in 2025, but you will see a lot more disruption unless these wars stop completely. Now, the second factor you alluded to is the CrowdStrike or the cybersecurity one, right? So CrowdStrike was just one incident. Now, as we are learning, hackers are learning as well. They have a lot more technologies, capabilities, right? So they know that they can play with these things and how vulnerable the software supply chain are. So we are going to see a lot more risks there. We don't know at this point of time whether we are going to have this in 2025, but you will see a lot more, just because the way things are going, just because the kind of infrastructure that we have, the kind of technology technologies we have, the way we have implemented. So we are just going to see a lot more of that.
Yeah, that makes sense. And then coming back to this quantum technology thread that you were just talking about, Sam, this is from Darian on LinkedIn. Darian says, how soon do you think quantum technologies will be available for mainstream business applications, and what industries are likely to benefit first?
Yeah, so think of this as more of the processing capacity, I would say. And I think it's going to take a long time. So I don't think, and that's why it's probably 15 on our list, because it's not necessarily relevant for businesses unless you are investing in quantum. So if you were a rich guy like Eric Kimberling, then you would be thinking about, okay, where I can invest
Right.
in these technologies right now. But overall, from the business perspective, it might take 10, 15 years before we see any sort of tangible real impact. You will see very similar announcement at ChatGPT or generative AI technology, maybe in the next 10, 15 years. But overall, I guess companies should be watching. There are companies who like to be 5, 10, 15 years ahead. If they are trying to be there, then they should be, monitoring this space.
Yeah, absolutely. Well, so this has been a great conversation, Sam. I'm curious, just as a closing question here. There's a lot of good stuff you've covered in these 15 predictions you have, and certainly the audience has brought up even additional predictions as well. But what kind of closing advice do you have to organizations that are trying to figure out, well, how do we, I don't want to get overwhelmed by all this stuff. I mean, there's a lot here to think about, but how do I create a digital strategy or roadmap for the next, say, 3 to 5 years that predict or that incorporates some of these threads into that? What are your recommendations there?
Yeah, so what I would say is do a thorough assessment of where you are. You really need to know if you have any sort of licensing pricing risks at this point of time. The kind of architecture that you have, what is the impact? What kind of impact you are going to see if these SaaS vendors are going to increase the pricing? Because that is probably going to happen. This is a near-term risk for the CFOs and the CEOs, because obviously you are going to be probably hard pressed for revenue in 2025 unless things become booming, which is probably going to be a rare possibility, I guess, in 2025 at least, depending upon how the governments operate. But for the most part, you are probably going to be hard pressed for that. So now you really need to watch out your technical and financial risks. So how do you do that? You really need to perform a thorough assessment in terms of how many different SaaS applications you have. And on an average, even the smaller organizations that are probably going to have $1 million in revenue, they are probably using 20, 25, 30, 50 different SaaS applications, and they all are going to have pricing impact that you just don't know at this point of time. All of a sudden, you are going to get these bills and you are going to get a shock that, okay, how did I get here? How do I pay this? And, the migration strategy is also going to be difficult. How do you sort of move from that? So that would be my advice, that, okay, do a thorough assessment and really know what kind of applications you are using at this point of time, what could be architectural risks, what could be pricing and licensing risk at this point of time of your architecture. That's probably the best right now.
Yeah, makes perfect sense. And I think it's easy to get intrigued and enamored by all these different trends and cool stuff that's happening in the enterprise tech space. But you also have to be aware of this stuff, but also back up and look at what's best for my business, what's going to give me the most immediate business value, and how can I start to incrementally consume some of these new technologies and trends without feeling like I have to take it all on at once. It's a longer journey, so it's good to look to that long-term future that we're talking about here today, but you also have to kind of back up and look to where you are today and how can you start down that path to get there.
Yep.
So do you publish this somewhere, your 15 predictions? Do you have that published on your website, or how can people find that if they want to read more detail and analysis? You guys put out really good articles and analysis, by the way, you and your team. So I it's a good read. I highly recommend people read it. Is that something you've published?
It's the same for Eric as well. I mean, these guys do an amazing job. So make sure you guys read Eric's material as well. From our perspective, these trends are published as part of our digital transformation report. So every year we publish the report and we compile these trends. And you can go back and check, what we did in 2024.
If you're right or not.
Exactly. In 2023 as well.
Yeah, it's always fun to do. And you're, like us, we put out our predictions too. And it's, you get some of them right and some of them you're off, but all you can do is take the input and the knowledge you have right now and look to the future and try and plan for it the best you can. So I think this is really helpful stuff. Thank you, Sam. Great stuff. Appreciate having you here on the show again today. That was really interesting. And, it's good to hear some of the perspectives that you bring to the table that I had not talked about back in episode 198 when I first talked about my view of the predictions for 2025. So thanks for being here. We're going to dive into some additional details from that conversation here in just a moment. We're also going to get into the top 5 ERP software costs, hidden software costs for ERP implementations. So be sure to stick around. We'll be right back with more Transformation Ground Control.
involved in any sort of digital transformation or business change initiative, you'll want to download the Digital Transformation Report. With its comprehensive overview of business and technology trends and best practices, this report is a must-have guide for any transformation project or executive team. Download this free report by visiting Third Stage Consulting at thirdstage-consulting.com. You can also visit our website to learn more about us or download independent reports, videos, and other best practices. Again, visit thirdstage-consulting.com today to learn how you can take your transformation to the third stage of success.
Are you looking for ways to promote your product or service to enterprise technology decision makers and influencers throughout the world, like the ones who listen to this podcast? Major Tom Productions creates media, events, and influencer marketing for B2B technology providers. Our productions are exciting, educational, disruptive, and effective. Most importantly, they create results. Our content is unlike any other in this industry, engaging, influential, and trusted by technology buyers and influencers throughout the world. Each month, our productions reach hundreds of thousands of targeted buyers and decision makers who trust and engage with our honest and tech-agnostic content. With long-tail viral results and engagement with our content, Major Tom Productions provides a way to reach your target market and create awareness, calls to action, and a connection with potential customers. So collaborate with us today. Learn how we can feature your product or service on podcasts such as Transformation Ground Control, Journey to S/4HANA, and Journey to Dynamics 365. We can also feature your brand on our YouTube channel called Digital Transformation with Eric Kimberling, which boasts over 100,000 subscribers and over 2 million video views per year. You can also participate in our in-person events, including our Digital Stratosphere Conference. Contact us today to learn more. We can tailor a marketing campaign that works for you. We look forward to helping more people learn more about and become engaged with your brand.
Welcome back to Transformation Ground Control, episode number 202. My name is Eric Kimberling here with Darian Chwialkowski. You can find new episodes of this show every Wednesday at transformationgroundcontrol.com. And Darian, we just had Sam on the show. We talked about trends predictions for 2025. What were some of your thoughts and takeaways from the conversation?
Yeah, I really appreciated, like you said before the conversation, his technical background, I thought, really played a role in the conversation, especially when one thing for sure, deep diving into like fintech and healthcare industries, I thought the explanation of why these industries have been slower to adopt some core ERP systems and unique challenges they're facing, I thought was super interesting. But I want to keep expanding on the conversation with you a little bit and ask you some follow-up questions. So to start, how do you see the shift in focus from cloud migration to customer service and operational efficiency impacting the long-term growth of fintech and healthcare companies?
Yeah, I think as we talk about with Sam, the fintech and healthcare companies have a lot of highly customized software, and so these companies are used to having technologies that are very flexible. They might be hard to manage. They might be complex and difficult to manage, but they do, generally speaking, provide the capabilities that are specific to their industries and what their customer needs are. Cloud systems, are less flexible, as we talked about. So you're just giving up some of that flexibility. I think there's probably longer term more of an opportunity here for some upstart, smaller software companies to pick off these industries like these, where they're used to certain capabilities that aren't commonly found in more broad ERP systems like SAP, Oracle, et cetera. So if you can fill that niche by creating a solution that's specific to the industry, and there might be some out there. I'm not a fintech expert by any means. I'm also not a healthcare expert by any means. I know manufacturing, distribution, retail, a bunch of other industries, but not those two in particular. I'm not strong in. But if there's not already, or even if there is, there's probably more opportunity for software companies to pick off and sort of focus on some of those capabilities that they need in those industries.
Yeah, absolutely. And I want to go to AI now. I also liked, how there was, you guys talked about incremental steps for AI adoption in ERP systems, especially with, the concept of starting with a small, low hanging fruit before scaling up. But with that, what are some tangible examples of low hanging fruit for AI integration in ERP systems that could deliver immediate value to businesses?
Well, I think for what we're seeing, and even not only what we're seeing with our customers and clients, but also what we're seeing with software vendors, it's a lot of conversational AI type stuff, to where it's more of like a user interface enhancement, where if you can build in capabilities where instead of having to go manually find a report or go dig through the menu structure to find a certain report or create your own custom report or whatever, if I could just use a conversational AI to ask it a question, that to me is low hanging fruit that a lot of organizations and a lot of employees within those organizations could benefit from. So that would be one. I would also say, anything that's manual and requires really complex spreadsheets and multiple data sources from multiple systems, I think that's an opportunity of low hanging fruit for AI to be able to go basically gather information and automate some of that process. So I think that's what you have to look at, is what are some of those really big pain points that you could address through AI. And then there's, and then over time you can start even looking at, through generational AI, you can start looking at things like, well, when I create if I have a CAD drawing, if I'm a manufacturer and I have a CAD drawing, which is basically the visual design of a product or a product that we're manufacturing, if I can take that CAD drawing and somehow use AI to create a product master and a bill of materials that could be used for manufacturing, then, that could be another way that we start to use AI, is through the more generational AI capabilities. So those are just a couple things that come to mind, but I think it all depends on the company and what the biggest pain points are and their priorities.
Yeah, absolutely. One more question I have is, how should businesses approach workforce upskilling in preparation for AI-enabled ERP systems, especially for the non-technical roles?
Yeah, I think that's something we talked a little bit about, but I think that's where it comes back to organizational design. Being able to define what your jobs are going to look like and what the processes are going to look like within those jobs. Once you've done that, then you sort of do a gap analysis to say, here's what we have today, here's what our skills are today, here's what we need in the future, and then you fill those gaps for different work groups, different departments, different people are just going to have different gaps that need to be filled. So I don't know right now that there's a broadly speaking universal or blanket recommendation I could give, because I think it's so tailored or so specific to the individual job in question.
Yeah, absolutely. That makes sense. What a great conversation, though, for the trends and predictions for 2025. It was good to go through his list and see how it varies a little bit from, like you said, the episode that you did talking about your trends and predictions for 2025.
Yeah, and if you want to compare notes or go see another episode that covers trends and predictions, you can go back to episode 198 at transformationgroundcontrol.com and check that out. You can see, my view of some additional predictions and some that overlap with Sam's as well. So check that out, episode 198. Well, good. Well, now we're going to roll a clip to close out the show here. We want to talk about the top 5 hidden software costs as it relates to ERP implementations. These are the costs that sort of sneak up on you. They grab you. They blow your budget. They make you wonder how do we get so far behind our budget or so far beyond our budget. So want to play this for you just as a way to sort of open everyone's eyes to like what some of the common challenges are with budgeting and cost estimations and managing to those budgets in ERP implementation. So let's roll this clip and we'll come back and talk about it here in just a second. This is from my recent video that I posted on my YouTube channel.
The first hidden cost that organizations oftentimes fail to account for when they're developing their total cost of ownership is internal resources. When you look at your internal resources that are required for a project, they're pretty substantial. You need a lot of full-time people in many cases to support the project, or at the very least, you need a lot of part-time people, not only on your core project team, but also with your extended subject matter experts. These are the people that'll help define what the future state processes are going to look like. These are the people that will help ensure that the system integrator is configuring the software to meet the requirements. They'll be involved with testing and training and change management. All kinds of stuff requires internal resources to ensure that the project is successful. Now, the bad news is most organizations are very lean. They don't have a lot of people just sitting around waiting for a project like this to come along. They've already got their day jobs, and in many cases, they have highly inefficient day jobs, which is why they're going through this ERP project in the first place. So it's a very tricky balancing act that organizations go through, and not enough organizations really think this through and mobilize their internal team when they start a project. Oftentimes what happens is you get the outside resources that come in, and the internal team's not ready. They haven't even defined who the internal people are, nor have they figured out how to backfill the resources that they're allocating to the project. So if we assume that resources are not infinite and that we have limited people and limited budget, we've got to figure out how are we going to backfill those people that are focused on the project so that they aren't pulled away from the project to do their day-to-day jobs in a way that undermines the project. So when you're going through this process, you want to make sure in phase 0, in that implementation planning of phase 0, to spend a lot of time figuring out what that internal team looks like, because you could argue the internal team is more important than the outside consultants you bring in, and that internal team has a cost and a price tag associated with it. And if you don't budget for those internal resources, then you're going to pay for it in other ways. You're going to pay for it via timeline delays that will cause the budget to increase over time because your internal people aren't engaged enough to make decisions. So either way, you're going to pay for internal resources. You want to make sure you have a strategy and are very deliberate about how you pay for that. One of the biggest justifications for new ERP software is that you can get rid of that old system that's costing you too much time, money, and headache. It might be an old homegrown system. It might be an old legacy system that a software vendor provided that's no longer being supported. It could be a proprietary system that only a couple people in the world know how to program. But whatever it is, there's a cost associated with running those old systems. So oftentimes when organizations build a business case for their ERP investments, they assume that those old systems are going to go away, and that makes total sense. You want those old systems to go away eventually. But what we often find is that it doesn't go away as quickly as organizations think, nor does it go away as quickly as they assume in their business case. So we want to make sure that we are realistic about what those costs are and how long we're going to have to maintain and preserve those systems. It could be because we need to make sure that the new system is stable before we shut off and decommission those old systems. It could be because we are doing a multi-phase rollout of the new system and we can't get rid of that old system until we get to the appropriate phase of the project. Or it could be that those old systems have data in it that we need to preserve and we don't necessarily want to bring all that data to the new system. So whatever the case is, we just want to be realistic about what those costs are and when the costs will actually go away. So if we're going to continue with those legacy systems, we need to make sure we account for that and budget for it in our total cost of ownership estimate. Now, what I would argue is probably the biggest hidden cost of ERP software is the unrealized business benefits that you never achieve. So in other words, you assume that you could be saving a certain amount of money because you're more efficient with new technology, or you're going to drive new revenue because of new technology. And those are probably viable expectations around business benefits, but too often organizations rush through the project and they mismanage it so much that they never realize those business benefits. And when you look at the business benefits that are lost or just left on the table or left off on the side and never fully materialized, those costs, those lost costs and benefits are typically much larger, exponentially larger than the initial cost and investment in the technology itself. So if you're really going to pick one thing to really make sure that you don't run into this issue of hidden costs and unexpected hidden costs, you'll make sure you realize the business benefits you expect to get out of it. And even though business benefits aren't technically a cost, there is a cost associated with the opportunity cost of not realizing those benefits. So that's the way we need to think about it. So making sure you have a solid benefits realization plan is a way to overcome this hidden cost of unrealized business benefits. One of the biggest line items that are most likely to go over budget is the system integrator costs, the technical implementer, that software vendor, service provider that's coming in to design, configure, and build the new software. And the reason for this is oftentimes these system integrators have this sense of an open checkbook. They feel like they gave you an estimate, but it's only an estimate, and they're going to take as long as it takes to get the project done right. And it could be that they had unrealistic expectations at the beginning. It could be that they're mismanaging their own resources. It could be that the resources are unqualified and therefore it's costing more to get the job done right. There's a whole plethora of reasons why it could be, but there are commonalities in a lot of projects where the system integrator, the technical implementer, spends way more time and money on their services than what was originally expected. And that oftentimes is what causes these projects to spiral out of control and causes these budgets to inflate to the point where it's hard to justify the ROI. So if there's one thing I could suggest here, it's really two things. One is to make sure you have realistic expectations for what your system integrator is going to cost. But secondly, and more importantly, make sure you're managing the system integrator, you're managing those resources, and that you're accountable and your team is accountable for managing that line item in your budget to ensure that the system integrator doesn't run away with that budgetary line item. I mentioned earlier how unrealized business benefits can be the biggest hidden cost in a digital transformation or ERP project. The other one that I'd say is either a close second, or you can make a strong argument for being the biggest hidden cost, is operational disruption. So in other words, when you go live, what happens to your business? Most organizations assume you're going to get business value and business benefits, but what more often happens in the short term is that there's some disruption, there's some turmoil, there's some chaos that ensues. Now, obviously, you want to minimize this chaos. You don't want there to be any more chaos than you need, but the reality is there's a learning curve. It takes people some time to get used to the system, and if you don't have the right governance controls and oversight in place, it's quite likely that you go live and you can't ship product. You can't close the books. You can't run payroll. It's a major material operational disruption that can cost you a ton of money. That's why when you look at the cost benefit of extending the project for a little bit longer or adding to the budget, or better yet, budgeting accurately from the start, you want to make sure that, yes, you might be increasing time and budget on the implementation, but you're also mitigating risk of operational disruption downstream. Now, obviously, there's a point at diminishing returns where you could spend years and millions of dollars implementing and still never mitigate all your risk. So you don't want to overdo it, but you also want to make sure that there's a minimum level of risk that you've overcome and mitigated, so that you know and you feel confident that when you flip the switch and go live on new technologies, you're not going to disrupt the business and create those unnecessary costs for your organization. So the key here is to optimize your investment in ERP software. There's always going to be hidden costs, and the key here in this video is to share with you what those hidden costs are so that you can be aware of them, open up your eyes, and go in with a clear understanding of what the project is really going to cost, so that when you go to your team and ask for budgetary approval from your higher-ups, you know that you can confidently say this is what it's going to cost, and you've accounted for some of these risks that we talk about here today.
So that was a YouTube video that I recently posted on my YouTube channel that talks about the top 5 hidden ERP software costs. What were some of your thoughts or follow-up questions from that, Darian?
Yeah, I definitely think that every company that is going through an ERP implementation or about to definitely should watch something like this, because like you said, little costs can sneak up and blow your budget and then slowly derail your implementation or your project. But I wanted to ask you some follow-up questions to expand on the video. First of all, how can organizations better estimate and allocate internal resources without overburdening their teams or impacting day-to-day operations?
Yeah, I mean, I think first is just to be realistic about what resource availability you actually have or don't have, and then make sure you're certainly identifying where you might be able to backfill some of those resources to free up resources to help with project. But you want to have a really clear understanding of that, because that is going to impact your timeline and your budget. So if your vendor comes back with a really aggressive timeline and budget that isn't feasible because you don't have quite the level of commitment you need from your internal resources, that doesn't mean you don't necessarily do the project. It just means you've got to pace it differently. And so what happens instead is most of the time organizations will get this proposal from their software vendor that has a kind of a compressed timeline with a certain run rate as far as what the spend is for the technology services. But then what happens is when that gets elongated because it was never realistic to begin with, or because the resource commitment wasn't there internally, the run rate continues at that same pace. It's not like you just pay whatever it is over whatever time it is. The budget goes well over because of that time crunch. So I think that's the key, is just to go in and really do some diligent planning and mobilization of resources and reconciliation of what the vendor proposed to you versus what you can actually do and commit to. And you as a customer have to push back and say, hey, you think we can do it in this amount of time, but we're probably going to need more time if we don't have enough resources. So let's pace it differently so that the run rate, the monthly run rate or whatever is tracking the way it needs to.
Yeah, absolutely. So what are the key factors that typically prevent organizations from achieving the expected business benefits, and how can they be mitigated?
Well, I mean, it's usually because to start, most organizations don't go back and measure where they actually landed after the implementation. They don't go back and see what business value they actually are getting and what business value they're not getting. And inevitably, no implementation is ever going to be perfect. You're always going to be leaving potential business value on the table if you don't go back and optimize and continuously improve and modify your processes, modify the technologies, modify the way people are using technologies. You have to do that in sort of an ongoing way. But instead, what companies do, they're always so rushed to go through these projects that once they get through an initial go live for a certain phase or a certain division within the company, they just move on to the next phase and start deploying technology in other parts for the next phase. And they don't take the time typically to stay back and sort of look at, what kind of benefits are we getting. They'll stay back to make sure that things are stabilized and things are okay, but they don't typically stay behind to make sure that we've really maximized the value and really gotten the most out of that investment we just made. And that's too bad, because you spend so much time and money and chaos and heartache and stress on these projects, and then to just move on and just sort of leave it, without being complete is a little disappointing, I think, for a lot of organizations. And that's why they don't get a lot of the business value. So first and foremost, you want to measure it, but you also want to take the time and build time into your overall plan and strategy and resource commitments to optimize. And that takes some time. It's not going to happen just 30 or 60 days after you go live. It's going to take, some months, to really optimize and fine tune, fix some of the problems and, and get to the point where you need to be.
Yeah, absolutely. And one last question today. Are there any specific go live strategies you recommend to reduce, the chaos and ensure that there's a smoother transition to the new ERP system?
Yeah, I think just being realistic about the plan and making sure you don't skip over things like testing and training and making sure you've got your processes well defined and that sort of thing. I mean, there's a lot to that, but I think the key is to take your time, make sure you have a complete plan that isn't just a technology implementation, but is also a plan and strategy that addresses all the organizational and operational needs as well.
Yeah, absolutely. Well, hopefully our audience found this useful today and got something out of it.
Yeah, absolutely. Yeah, thanks to the audience for the great questions here today. Thank you, Darian, for another great episode. And thanks to Sam again, Sam Gupta from ElevatIQ, for being here today. Really appreciate him being here, and look forward to some additional episodes here here in the closeout of 2024. And hope every Wednesday we've got new episodes. I hope to see you here next time. TransformationGroundControl.com is where you can go to see all the past episodes of this show. So be sure to check that out. You can also subscribe to it, watch it, or listen to it however you want, or whatever platform you want. So Third Stage Consulting is the sponsor. Major Tom Productions is the producer of the show. Thanks for being here today. We'll see you next week on the next episode of Transformation Ground Control. Take care.